Welcome to the Reserve Bank of Zimbabwe. Let us begin our session with a word of prayer.
Let us pray. Our Heavenly Father, we come before your throne of grace this morning and we ask for your presence as this presentation will be done. We want to thank you, Lord Jesus, for the journey traveled so far and for the stability that you've brought to Zimbabwe. Father, we ask for acceptance of what is going to be presented, and we pray that your Holy Spirit will be with us and will guide us. We want to pray all this through your Son.
For finance, economic development and investment promotion, although I don't see him, in absentia, represented by my brother Vumbe, the Deputy Board Chairperson of the Reserve Bank of Zimbabwe, and board members of the Reserve Bank of Zimbabwe. Reserve Bank of Zimbabwe Deputy Governors, representatives of the international financial institution, including the IMF, World Bank, AFDB, MEFMI, and Afreximbank. Heads of national regulatory bodies, the President of the Bankers Association of Zimbabwe, CEOs of the banking sector and leaders of business associations, representative of the private sector, academia and civil society, directors and senior managers of the Reserve Bank of Zimbabwe, members of the media, ladies and gentlemen. It is my absolute pleasure and privilege to welcome you all to the Reserve Bank of Zimbabwe this morning. Distinguished guests, as you are aware, we are gathered here to witness the presentation of the 2026 Monetary Policy Statement by the Governor of the Reserve Bank of Zimbabwe, Dr. John Mshayabane. This monetary policy statement is presented at a time when there is heightened global economic fragmentation and heightened uncertainty. Despite these challenges, the economy is experiencing growth uptick in most sectors under vastly more stable financial conditions across the board than in the past. And the Reserve Bank remains steadfastly committed to its mandate of ensuring price, currency, and financial stability, critical factors that foster sustainable economic growth. The Reserve Bank of Zimbabwe also continues to engage in conversations with stakeholders as part of its auscultative, consultative, and communicative approach to monetary policy formulation and implementation. This way, the Reserve Bank ensures that monetary policy is robust, evidence-based, and forward-looking. What makes this morning's monetary policy statement particularly different from others is that it coincides with the launch of the new redesigned ZIC banknotes, a symbol of our commitment to continue modernizing our currency, ensuring its convenience, acceptability, security, and durability for our transacting public. Ladies and gentlemen, without further ado, it is my singular honor to call upon the Governor, Dr. John Mshayabane, to present the February 2026 Monetary Policy Statement. Governor, sir, the floor is yours.
morning. May I recognize the Minister of Finance, Economic Development and Investment Promotion, hereby represented by Honorable Deputy Minister David K. Mnangagwa, the Commander of the Zimbabwe Defense Forces, General Emmanuel Matatu, the Commissioner General of the Zimbabwe Republic Police, Comrade Stephen Mtamba, the Commissioner General of the Prisons and Correctional Services, Comrade Moses Chiobu, the Director General of the President's Office, Dr. Fulton Mangwanya, the Deputy Board Chairperson of the and other board members here present, members of the Monetary Policy Committee here present, and I must say, if you don't agree with anything that is in this monetary policy statement, you blame them. They are seated in that corner there. Reserve Bank of Zimbabwe deputy governors and directors, representatives of international financial institutions. I see the World Bank, IMF, AFDB, MEFMI, Afreximbank, the immediate past president of the Bankers Association of Zimbabwe, I see you, CEOs of banking institutions, and all stakeholders that we consulted as we prepared this monetary policy statement, members of the media, ladies and gentlemen, welcome. Today's monetary policy presentation is under the theme, Deepening Currency Usage to Consolidate Price and Exchange Rate Stability. Deepening domestic currency usage to consolidate price and exchange rate stability. And I think this will become more clear as we launch the new Big Five, Big ZIG banknotes. We are meeting at a time when the situation on the ground is looking good. We have managed to reduce annual inflation from a high of 95.8% in July 2025 to single-digit levels of 4.1% in January, and only yesterday we got the February inflation figures at 3.8%. So we are now firmly in single-digit territory and in line with the SADC benchmarks of 3 to 7%. So for the first time in many, many years, we can stand and say we are operating in line with the SADC benchmarks. We have also managed to grow reserves from 0.18 months when I took over in April 2024 to 1.5 months of import cover as of 31 December 2025. We also, as we promised in my maiden monetary policy statement, have ensured that at any one time, reserve money is fully backed by reserves. And we have also managed to contain growth at inflation neutral levels. As regards foreign currency, we have continued to generate significant inflows of Forex. Last year we did in excess of $16 billion US, and arising from that, we are seeing a situation where there are no outstanding invoices to be paid when it comes to payments that we have to make externally. We have also managed to increase the demand for ZiG from less than 20% in 2024 to between 35 and 40% for electronic transactions as we speak. The banking sector has remained very stable. We have not seen any troubled bank in the market. And as regards our cooperation with the Ministry of Finance, I'm pleased to say to you that we meet regularly. In fact, myself, the Minister, and the Permanent Secretary for Finance meet every week. So there is no basis or cause or need for any friction between the two parties. I'm going to present this monetary policy statement in two parts. The first part is going, first of all, to look at what we have managed to do, what did we promise you in 2024, and how have we fared when it comes to those promises. And then I'll come up to the measures that we are introducing in this monetary policy statement. And then the second part will involve the launch of the new ZiG banknotes, which are of very good quality, as you will see. As the central bank, one thing we said we wanted to do was that we should communicate. And in coming up with this monetary policy statement, we engaged in a survey to gauge from the public what they think of the ZiG currency. We also held extensive stakeholder consultations. We met with CZI, we met with ZNCC, we met with the CEO Roundtable, we met with the Consumer Council. We even met with the former governors and deputy governors so that they also give us their piece of their wisdom. Because as you know, former governors are not supposed to publicly comment on what is happening. But we took it upon ourselves to bring them here and say, in the privacy of the central bank, tell us what's and all, what you think of us. And they told us. And some of their input is in the monetary policy statement. So, in April 2024, we said we wanted to achieve four things. First, we said we wanted a stable national currency. We also said we wanted a stable exchange rate. We wanted to see macroeconomic stability. And we wanted to foster an environment of policy credibility. And in trying to achieve those, we adopted a hybrid monetary policy framework with reserve money as the operational target and the exchange rate as the intermediate target. This recalibrated monetary policy framework has served the country very well in effectively restoring price and currency and exchange rate stability. So, to achieve those four pillars, we said we wanted to see a market-determined exchange rate. And in so doing, we introduced the willing seller, willing buyer foreign exchange arrangement. It has served us well, and as you can see from the graph there, we saw a gradual and significant reduction in the parallel market exchange rate. We saw the willing buyer, willing seller exchange rate stabilizing and oscillating between 25 and 27. And we have seen a significant reduction in the parallel market premium. We also said we wanted to introduce an efficient and optimal money supply management. And we did that by setting targets as to where reserve money would be at the end of each year. And as you can see from that graph, we have managed to live within those targets. The tight monetary policy that we introduced resulted in us reviewing the policy rate from 20% to 35% in September 2024, thereby curbing inflation and exchange rate pressures. We also set for the market what we call the optimum liquidity level, based on the historical transactions that they are transacting on a monthly, daily basis. And as you can see from that graph, the market is continuously traded within the optimum liquidity level. I know people have said there isn't enough liquidity in the market, but as you can see, while we set the optimum liquidity at that high level, banks have not been able to exhaust that limit. We have also seen a significant decline in money supply growth, declining to as low as 2.7% in 2025 compared to over 40% that we saw in prior years. And on the inflation front, as I said earlier on, the achievement has been quite remarkable. You can see the significant steep decline in the rate of inflation from when we started up to where we are today at 3.8%. In April 2024, we also introduced the new structured currency, ZiG. And what we have noticed is that it has been widely accepted in the market, but the challenge has been on the quality of the notes. The market is saying improve the quality of the banknotes. On reserves, as you can see from the graph that is going to be shown just now, our total reserves are actually exceeding the total SIG deposits in the market by 2 times and covering reserve money by a lot more. On the governance front, my board members here will confirm that we have introduced new board committees to ensure that there is increased oversight on the operations of the central bank. We also reactivated the Liquidity Management Committee, which is a committee comprising of officials from the Ministry of Finance and officials from the central bank, and arising from that coordination, you would have seen that we have managed to achieve zero lending to government because we are anticipating cash flows as they occur and take appropriate measures to ensure that the government does not have to come to the central bank for accommodation. In terms of monetary policy effectiveness, we have continued to maintain the zero credit arrangement to government. And you will see in NDS2, we have reduced the maximum amount which the Treasury can borrow from the central bank from 20% of the previous year's collections to 5% of the previous year's collection. But even then, the Deputy Minister here is here, and the Minister is always on record for saying they have no appetite to come to the central bank for accommodation. And he's here to confirm that. In terms of other measures that we have implemented, we have ensured that communication becomes one of the tools we use in the central bank. And you would have seen that once every quarter, we give you figures of where reserve money is, where broad money is, where the exchange rate is, where our reserves are, so that we walk the talk together with you. Now, the table that you are going to be seeing that just now is very interesting. It tracks all the metrics where we are saying ZiG month-on-month inflation. You will see that for the past year, it has averaged almost 0 to 0.2%. Annual inflation, as we said earlier on, was sitting at 4.1% in January, now at 3.8%. But the total deposits, ZIG deposits in the market, that is the third line, are sitting at about 21 billion ZIG. Take note of that figure because I will talk about it again later. Non-performing loans in the banking sector, well below the international benchmark of 5%, currently sitting at about 3.47%, which is evidence that the banking sector is not troubled. Reserve money, the reserves that we have are sitting at about 34 billion ZIG when converted. So you are seeing reserves of 34 billion and deposits of 21 billion. The market position, again, I must reiterate, people have been saying there is a liquidity crunch in the market, but look at those figures. The market has been long to the extent of over $2 billion every day for the past 2 years. So there is no liquidity problem in the market. In terms of our reserves, in US dollar terms, we are sitting on over almost $500 million in our balances at the Federal. Gold, as of January, we are now at 4.2 tons, worth 738 million US dollars. And when you add all that up, our total reserves are 1.3 billion US dollars as at the end of January. If you look at the uncovered position, by uncovered position, we're talking of foreign currency invoices in the market that have not yet been honored. As at the end of January, we're sitting on only $4 million. What that is telling you is that the foreign exchange market is clearing on a daily basis. The willing buyer, willing seller exchange rate, end of January was sitting at 25.5. You can see that ZIG has been strengthening over the past 3 or so months. And again, you find that when I talk about the surrender requirements and the instruments that we have introduced to ensure that the exporters get value for their US dollars, in the past, exporters were saying, we can surrender the foreign currency, but don't pay us the ZIG immediately, because we know that the ZIG is going to go one way. The exchange rate will depreciate. Now they are saying, no, the ZIG is appreciating. We want you to pay us immediately, because we would lose value if you pay us later. So what that is telling you is that there's now increased confidence in the local currency. But I think the most important number that I would like you to see there is the last line, where we are talking of an implied exchange rate. If we were to use the reserves that we have, totaling 34 billion ZIG, to buy back all the ZIG deposits in the market, we could do that at an exchange rate of 14.247. What that is telling you is that the current exchange rate of 25.56 is undervalued. The difference between 14 and 25 is what we call the confidence gap. And that is what we need to address as the central bank. And that is what we've been trying to address over the past 2 years. So, if everything was working well, the exchange rate should be 14.2, not 25. But we are in a willing buyer, willing seller environment. The market has decided that the exchange rate is 25, so be it. So let me now turn to the measures that we are announcing today. First, on the policy rate. We have decided to maintain the policy rate at 35%. You might ask, if inflation was 4.1% in January, 3.8% now, why are you also not lowering the policy rate? The argument is very simple. We need, first of all, to ensure that we have anchored inflation expectations. I always use the example where people should not celebrate too early. If you go to a doctor and they give you medication, most often after a day or two you start feeling better, but the medication will be lasting for a week, if not 2 weeks. If you stop taking that medication, when the ailment eventually comes back, it will be more serious than before. So allow us to take the medication as prescribed by the doctor until the time is right for us to start easing. If you look at what other central banks have done, you can see there, we start with the European Central Bank. When the inflation line crossed the policy rate line, they did not also immediately reduce the policy rate. There was a period where they maintained it in an effort to anchor inflation expectations. You see the same with the Bank of England. The blue line is the inflation rate, the red line is the policy rate. Closer to home, in fact, the South Africans did the opposite. When the inflation line crossed the policy rate line, they upped the policy rate to further anchor inflation expectations. And this is precisely what we are doing. We first crossed the line in December when we hit 15% month-on-month, year-on-year ZIG inflation. So we have December, January, February. The Monetary Policy Committee members are here. Maybe at their next meeting, they might think that we have taken enough medication. It's time to start easy. It's up to them. I will not speak on their behalf. But for now, the intention is that we anchor inflation expectations. Therefore, the policy rate will be maintained at 35%. On deposit rates, we have agreed with my colleagues in the banking sector that now that inflation is now down to single digit, we also need to start paying depositors real interest rates. We haven't changed these rates. These rates were set at a time when inflation was above 90%. But now you can see that there is every incentive for an investor to bank. So for ZIG deposits, the minimum which we expect banks to pay for savings balances is 5%. And for time deposits, 7.5%. You can see that at a year-on-year inflation rate of 3.8%, investors will be getting positive returns. For US dollars, savings 2.5%, time deposits 4%. Where is year-on-year inflation now? It's just under 1%. So again, positive returns. Statutory reserves. When we did consultations, people were saying statutory reserves are too high. They are at 30%. And I always say to them, it's not true that statutory reserves are at 30%. They are at 15%. The reason why we have two figures, 30% for demand deposits and 15% for time savings and time deposits, is to encourage my colleagues, the bankers, to bring in deposits that are going to stick. Currently, we have people who are depositing money today and they want to withdraw it tomorrow because they are getting zero interest from the banks. If banks can attract savings and time deposits, they should be able to lower their statutory reserves to 15%. So the challenge is no longer with us. If banks want statutory reserves to go down to 15%, they know what to do. They have to encourage their customers to save. And when you have money that is on savings and time deposits, you now have a stable deposit base from which you can then do longer term lending. Because currently we are seeing banks only extending short-term loans. Why? Because they are sitting on demand deposits. So we are maintaining statutory reserves at 30% for demand deposits and 15% for savings and time deposits. Non-negotiable certificates of deposits are a direct OMO instrument. I don't like them, but we have had to use them because banks are not trading with each other. And so when there is excess liquidity in the market, we've been taking that liquidity from the banks at zero interest and then passing in turn to the bank that wants the liquidity at the policy rate. But banks can avoid that by simply lending to each other so that we don't have to be the intermediary. So we are using a carrot and stick approach here where we're saying to banks, if you don't want your money to be on NNCDs at zero, lend the money to the bank next door. So this measure will remain, even though it's a very blunt tool which we don't want to use. But we are forced to use it because there is market segmentation and banks are not trading with each other. However, having said that, we have said to the banks, maybe they are not investing because the treasury bill market is not that active at the moment. So we have introduced a term deposit which is underwritten by the central bank, which we call the ZIG-denominated term deposit facility. So a bank can avoid having their money swept into NNCDs by placing their money in this instrument, which will be earning interest, and the central bank will be in the market on a weekly basis, and banks that may want to invest in it will invest, and they will avoid having their money taken on NNCDs. The other product that we had introduced last year, which is the US dollar denominated deposit facility, is still there. But we can see that for now, people are not wanting to use it because the ZIG is strengthening. They were using it as a hedging instrument. But now, because ZIG is strengthening, they want to be paid immediately. So there isn't much traction on it, but we are keeping it there in case ZIG moves the other way around. On foreign currency retention, I did mention earlier on that the foreign exchange market is currently clearing. We don't have any outstanding invoices that should be paid for anything that have not been paid. This is as a result of the 30% surrender that we are getting. We have decided to maintain it at 30% because we are seeing an uptick in the price of prices of our commodities. So even if we export the same quantity that we exported last year, we should be able to realize more because the price has gone up. So 30% of a larger figure will be a larger figure, which means the foreign exchange market will still be able to clear. So we are maintaining the export retention or export surrender at 30% surrender, 70% retention. But in the past, we had small-scale gold miners who were exempt from export surrender. If you remember, when I first came in, I said, this is not animal farm where some animals are more equal than others. So we now want to start gradually bringing these in the net. So for now, they are going to have to surrender 10% and retain 90%, and the figure will be reviewed as we go. So it's 70% retention for everyone. For small-scale gold miners, it's 90%. We were also beginning to see arbitrage activities where large-scale gold miners were now marketing their gold as if they were small-scale, via the small-scale, and we want to bridge that. The targeted finance facility was introduced last year as an inflation-neutral way of injecting liquidity to the productive sector. It has served its purpose very well, but I noticed that as of yesterday, almost everyone who borrowed under it had repaid, and I asked why. And I was told, well, everyone was expecting that you were going to reduce the policy rate. So they wanted to repay so that they can redraw at a lower rate. Unfortunately, it hasn't happened. But we are maintaining this targeted finance facility, and in fact, we are doubling it from 600 million ZiG to 1.2 billion ZiG. It has served its purpose. People who have accessed it have been able to use it to bring in raw materials, because even if you are getting it in ZiG, you should be able to go onto the willing seller, willing buyer market to get Forex to import whatever it is that you want to import. And that pie chart is showing you that at peak drawdown, most of that money went into manufacturing at about 49% and agriculture at 34%. We also later on allowed the retail sector to access it, and they accessed 15% of the targeted finance facility. While I said earlier on that we have an effective willing buyer, willing seller foreign exchange trading arrangement, we have continuously received insinuations from the public to the effect that they think that there is a central bank hand in the determination of the exchange rate. I can tell you that all we do as the central bank is to collect trades that would have been traded by the market every day. We say to this bank, how much did you buy at what rate? How much did you sell at what rate? We do the same to the next bank. And then we calculate a weighted average exchange rate. But the market does not believe us. So we have said, let's remove the manual element to ensure that price determination, price discovery is done in an electronic manner. So as a central bank, we are developing a foreign exchange trading system, which is going to be algorithm based. You go into that system anonymously with a sell order or a buy order, and your orders will be matched. And only after the orders have been matched will you know who you have traded with, and you settle. This system is currently being developed. Some of the bankers here will tell you that we have involved them in user acceptance testing. They have come back to us with some very useful comments on how we can improve the system. We are working on those comments, and once we have perfected the system, it's going to be subjected to validation by a reputable international organization. I won't mention them, they are here, but we are not just going to say we have developed it on our own and it's okay. We want the system to be validated. And once it has been validated, we'll introduce it and we start trading electronically, and price discovery will be done electronically. So you will be told when the system is ready for trading. The same applies to the publication of daily reference rates. Again, people were not clear as to exactly how we calculate. In this monetary policy, we are just clarifying that we take trades that would have been traded up to the close of trading business, cut-off date, cut-off time, and then we work out the weighted average. But after we introduce this system, we won't be calculating it manually. It will be there, real time. As people are trading, the weighted average will be updating itself. So again, we are removing the manual element in case you think there is a central bank hand in the determination of the foreign exchange rate. We have no interest in determining the exchange rate. It has to be market determined. Now, in our consultations, we also received complaints from the market that the limits for mobile money were now so low that it was pointless transacting. So we have decided to review the ZiG limits upwards. The US dollar limits remain the same, where for person to person in US dollars, per transaction, you can do 500 per month, per transaction, per day, but the limit for the month is 1,000. For P2B, you can do a transaction at 1,000 per day, but the limit for the month is 3,000. That's US dollars. And for ZIPIT, 1,000 per day, monthly limit 3,000. But you see that on the ZIG side, that's where we have reviewed from the monthly limit has now been pegged at 50,000 ZIG, which is approximately 2,000 US dollars, and the daily transacting limit or transaction limit is now about 13,000 ZIG. So we have upped the limits. Now, there has been a lot of talk about ease of doing business, and we must appreciate what government has done. They've slashed charges for almost everything that the government is doing. And so we felt that as the central bank, we must also follow suit. We can't talk about ease of doing business only as it pertains to government, and we say we are not touched. As the central bank, we provide the RTGS system to the banks, and as you can see from there, we have reduced the charges that we charge to the banks by 11%, almost across the board. So us having done that, we then sat down with our colleagues in the banking sector and said, you know, the rest of the economy is trying to improve the ease of doing business. What are we doing as a sector? So there was a letter which was being circulated on social media where I wrote to the banks and said, let's have your suggestions. They came back to us and they said, we have heard you. As you are aware, we are in the process of digitalizing our systems. And as we digitalize, we are reducing the cost per transaction, and we should pass it on to our customers. So here is what they offered. And I think we must applaud, because this is the first time that the bankers voluntarily said, no, we also need to do something. Last time they agreed that $0 to $5, no bank charges. Any transactions between $0 and $5. And then they agreed that any balances below 100 US dollars or ZIG equivalent, there would be no service fees. But they've gone further. And they've said cash withdrawal fees, I think it was going at anything 3 to 4%. They've said the maximum should now be 2% for cash withdrawal. That's a massive reduction. They've also reduced point of sale charges, and the maximum is now 1.5%. Again, these charges were going up to 3%, and they've pegged the charge per transaction at $20. They have removed the balance inquiry charges. In fact, I said to them, well, this is, I don't think people will applaud that, because I go to my bank and say to them, how much do I owe you? I want to know. And they charge me for asking so that I can pay them. So they said, no, there is no more charge for balance inquiry. The same with cash deposits. They used to charge cash deposit fees, but now they've scrapped that. When you deposit cash, if you deposit your $100, it will be $100 until you want to use it. And on bank cards, all they are doing is, what they charge you is the cost of renewing that card. They're doing it on a cost recovery basis. If their supplier says it's $1 a card, they will charge you $1 a card. I think the banking sector deserves a round of applause. And arising from this, they are going to see more and more people wanting to open accounts. Because remember, on the savings side, they are going to pay real interest rates for deposits, and then the bank charges have been reduced. So no more vaults, no more mattress banking. The banks are open for business. Now, we have a serious problem with the mobile network operators. I think about 2 weeks ago, you may have read in the press where some boys in Chitungwiza were found with 50 SIM cards each. And each of those SIM cards is a wallet. Obviously, those are ghost accounts. Some of them, when the police now try to trace to say, this fraud happened, who was the perpetrator? They hit a dead end because the account that was used to receive that money belongs to a deceased person. So we are ordering MNOs that before the end of June this year, they must have, with the assistance of the Registrar General, screened all their accounts and eliminate any account that cannot be validated by a valid ID through the central registry. And the central bank is going to audit that by the end of June. We cannot have an environment where people are laundering money through ghost accounts. That we will not allow. So they must, with immediate effect, start cleaning up their databases. Secondly, when the bankers agreed to charge no fees for transactions between $0 and $5 or ZIG equivalent, the MNOs thought they were not banks. They want to be banks when it suits them, but they don't want to be banks when it doesn't suit them. So this 0 to 5 free of bank charges is applying to them as well. And we would want the public to let us know if they are charged for a transaction below $5 by an MNO, they should let us know, and we will draw that license for that MNO to offer services. Then, still on the MNOs, we have noticed that MNOs are issuing what are called nano loans. They say, oh, when you run out of airtime or when you want something like for $10, just dial this star hash and we'll give you the loan. They are creating money. Now imagine a mobile network operator with 10 million subscribers, and they give each one $10. That's 100 million US dollars that they will have created, not banked by a deposit, not backed by anything. And that's money creation. So with immediate effect, all these nano loans must be underwritten by a commercial bank. They must be sitting on the balance sheet of a commercial bank, and the central bank is going to audit that. Now, the issue to do with what used to be year 2030 when it comes to the use of monocurrency. We want to restate that from where we sit at the central bank, and also from the ministry side, I can speak on their behalf on this one. We are not talking about 2030 anymore. We are talking about conditions precedent for us to achieve monocurrency. And these conditions precedent are, first, we must have durable economic stability characterized by low and stable inflation at single-digit levels. So where are we now? We had single-digit in January, single-digit in February. But as I said earlier on, it's too early to celebrate. We want to sustain that over a period of time. But we can partially tick that box because we are on the road to achieving it. But I don't think, based on 2 points, we can say we are now ready to go for monocurrency. So we are not ready. But is it possible that if we sustain this for 2026, 2027, 2028, is it possible that we could go monocurrency in 2028? Why not? But as we said also, this has got to be market-driven. You find that when you go into monocurrency, you won't be told. You are the ones who will be indifferent as to whether a person pays you in US dollars or ZIG, you won't mind. But it will only happen if we achieve these CPs. The next CP is that we should have 3 to 6 months of import cover as reserves. Currently, we are sitting on 1.5 months. Are we there? Not yet. Therefore, can't talk of monocurrency now. But at the rate at which we are building our reserves, if we did 1.5 months in less than 2 years, there is a very good chance that we could do 6 months in another 3 years. I'm trying to say 2030 might come before or after 2030. We don't know. But as long as we have got these CPs under control, there will be no challenge in introducing a monocurrency. We also said we need an efficient foreign exchange management system that eliminates foreign exchange market segmentation and promotes ease of access to foreign currency by importers and for other bona fide requirements. Currently, we do have a system, but I'd say it's not deep enough. We need to then bring in this new system, also get more people selling money on the willing seller, willing buyer market, and then we can tick that box. We said we want stable exchange rate dynamics with minimum over or undervaluation of the ZiG. Yes, we are currently enjoying that, but the premium is still a bit too high for me. It's just under 20%. Maybe once we manage to reduce it further and we continue to have the stable exchange rate, we can tick that box. Increased demand of ZiG through recalibration of the percentage of government taxes and broadening payment of public goods and services in local currency. Government currently said 50% of your tax is payable in ZiG, 50% in US dollars, or if you are paying more if you are receiving more ZiG, you pay more tax in ZiG. It has worked. We are seeing situations where at QPD, corporates are running around selling foreign currencies to get ZiG. But we have said to these corporates, it's not necessary for you to do that. If you sell some of your products in ZiG, you will not be running around looking for Forex on QPD. Because when you sell Forex to the banks, the bankers are here. They'll buy it from you at the buying rate, which at the moment is 25 point something. But when you are selling your product, we said you are free to sell it at an exchange rate of your choice. You could have sold your product at an exchange rate of 30. So if there are any corporates who are here, who are listening, take it from me. Start selling some of your products in ZiG so that you don't have a problem at QPD. But as we go towards monocurrency, the ministry will be reviewing the percentage payable in ZiG until maybe we'll get to a situation where they will say, we don't want any US dollars, you pay us in ZiG completely. And when that happens, it means you are also 100% local currency. We said we want financial sector stability is there, so that box, if that were the only CP, we would be in monocurrency today. As an efficient national payment system, we have got that. And fiscal and monetary cohesion, no financing of budget deficits, we've been doing that for the past year and a half. So we have already ticked some of the boxes. But what it means is that, what do we mean when we say monocurrency? When we get there, it means that all domestic payments will be transacted in local currency. If you go to a shop wanting to buy bread and you've got $1 US, the shop will tell you to go to the bureau to change next door, change your dollar into ZiG, and then they'll sell you bread. That's what we mean. But what don't we mean? Any contracts that are denominated currently in US dollars will continue to be denominated in US dollars. I know some of you have benefited in the past. When we did the 1:1, someone had borrowed $1 million US, it became $1 million Zimbabwe dollars, and ultimately became nothing. It was paid for them by inflation. This time around, it's not going to be like that. If you borrow in dollars, you are going to pay in dollars. If you have a contract in dollars, it's going to run in dollars. If it is in yen, same story. Anyone who is a holder of an FCA will continue to have their FCA. You are the one who will decide when you want to change your currency. Because if you are going to buy bread and you've got $100 in your FCA, the shop will not allow you. The ones on the VFX are not affected. It's a US dollar stock exchange, and it will continue to be a US dollar stock exchange. So you may ask, if I have borrowed $1,000 from the bank, and we are now in monocurrency and my salary is now ZiG, how am I going to pay that US dollars? You will be allowed to go on the willing buyer, willing seller market to buy enough money for you to pay your installment for that loan. Unless the bank itself says, you know what, today the rate is so and so, just give us this amount in ZiG. It's at the discretion of the bank. So I've heard stories that banks are now restricting the period for which they are lending and so forth. There's no need for that. Because first of all, if you are going to restrict the period, now that we don't know the date for monocurrency, are you going to lend for one day? What if tomorrow monocurrency comes? So I think that question is now answered. Now, you also be aware that we reached a staff level agreement with the IMF on a 10-month staff monitored program. I must say that, because I have listened to social media and some of you talk, the IMF did not prescribe to us what should be in the SMP. We told them what we are doing, and they are going to be monitoring to see if we are doing what we said we are doing. And if you look at the structural benchmarks that they have given us, improve foreign exchange market efficiency, that's exactly what I was talking about. That's what we are doing. And they are just going to monitor to say, are you doing what you said you are doing? They want us to promote the increased use of ZiG. That's exactly what we're saying by saying 50% of QPD, is it going to be 70%, 100%? They are just going to be monitoring to see if we are doing what we are doing. So if we fail this SMP, don't blame the IMF, don't blame anyone, blame us, because we told them what we wanted to do, and then if we don't do what we said we were going to do, whose problem is that? They have also said we should continue accumulating reserves. That's exactly what we are doing. We are at 1.5 months now. This year, we want to end at 2 months, if not more. And they are just going to say, are you doing what you said you are going to do? They said, continue with your prudent monetary policy management. That's exactly what we've just done today. When we said we are not moving the policy rate yet, that's what they expect us to do. And they said, strictly adhere to reserve money targets. That's exactly what we've been doing. So I'm just saying to you, let's not read too much into the SMP. They are trying to monitor us so that they can confirm to the rest of the world that we are now as good as any other country. Then, today we are also going to be introducing the Big Five ZiG banknote series. As you know, we are allowed to issue banknotes in terms of the Reserve Bank Act. But I need to tell you that, because some of you have been saying, oh, they are now printing money. The cash that we are printing is substituting electronic money. When banks come to us to get this money, they are coming to exchange their electronic balances that are in their account at the central bank, and then they get the ZiG cash. But maybe before we get to the actual features of the currency, I just want to maybe just walk you through what we think is the economic outlook as we get to the end of the year. You know, we had a very good growth rate. Last year we had said we were going to grow at 6.6%, but the minister here will tell you that they are already in the ministry talking about anything above 8%, which means we have done well. But for next year, we are starting on a higher base, and we are targeting 5% growth. We also expect inflation to remain within single-digit levels, and month-on-month inflation is expected to remain below 1%. We expect the exchange rate to remain stable because we are going to make sure that the foreign exchange market clears on a daily or weekly basis. We are expecting a current account surplus of not less than 2.5 billion this year, again, which means there should be no pressure on the exchange rate. As I said earlier on, we are expecting to end the year with an import cover of 2 months import cover. For those of you who want the US dollars to continue, it means we are not yet ready for monocurrency by the end of this year because we don't have 3 to 6 months import cover. So as the central bank, we will continue to walk the talk and continue with the prudent monetary policy stance that we have said we are going to be implementing. So now turning to the notes, new notes that we are introducing, there is a statutory instrument that is going to be promulgated just now. You will see it announced before the end of the day. And that statutory instrument is going to usher in a new series of ZIG banknotes. I must reiterate that these banknotes are going to co-circulate with the existing notes that we have in the system. So we have the 10 and 20 that are in the system. We're going to introduce new notes that are coming in. They will circulate side by side. So banks are required to make sure that they continue to receive the old series ZIG banknotes. When you are in a shop you are buying, if someone brings the new one, it's okay. Someone brings the old one, it's okay. If you get change from a shop and you are given the old one, it's okay. But when that money comes to the banking system, banks are expected to take the old notes, bring them to the central bank, and we destroy them and we give them value in new notes. So the ZIG new series banknotes will start circulating from the 7th of April this year. Between now and the 7th of April, we are going to go on an extensive awareness so that people know the features of these notes. Today, by the 5th of April, we are going to make sure that the ZIG 10 and ZIG 20 notes and ZIG 50 are introduced to the market. So it is going to be ZIG 10, ZIG 20, and ZIG 50. The 100 and 200 are there, but we will introduce them to the market later, and we'll tell you when we are ready to introduce them. Aligned to that, we had also noticed that the market was no longer using ZIG coins. And we have noticed a situation where a combi ride is now said to be for 20 ZIG. But even if you are using an exchange rate of 30, 50 cents should be 15 ZIG. So we are reissuing ZIG coins so that if my combi ride is 15 ZIG, I give you 10 ZIG and a 5 ZIG coin, and I'm good to go. And we are encouraging our banks to make sure that the coins are distributed and are available in the market so that we don't end up with prices being inflated simply because people do not have change. So those are the coins. They are there. They've always been there in the system. We are simply relaunching them. And for the notes, so as I said earlier on the 7th of April, we are going to make sure that all the banks have got 10, 20, and 50 ZIG. On the 10 ZIG, there is a buffalo on the front and the matopo. I think you can, Dr. Mpofu, you can just pass these around so that people can touch and feel them. On the 20 ZIG is the elephant, and at the back there is our new parliament building. And on the 50 ZIG there is a rhino in front, and the Lake Kariba at the back. So you can see that we are talking about our big five animals, and we are also talking about national monuments of significance. On the 100 ZIG, we have the leopard in front and the Victoria Falls at the back. And the big one, 200 ZIG, the lion in front and the Great Zimbabwe at the back. So coincidentally, the lion happens to be the totem of our president, but there's no link there. It's just by coincidence that it's the. So we are going to make sure that all bank ATMs have got the new ZIG notes. We are going to make sure that every bank and every branch has got the new ZIG notes so that we don't have a situation where people are saying we have not seen these notes. Now, having introduced the new notes, we have also taken the liberty to now review the cash withdrawal limits for ZIG. Currently, individuals were limited to 3,000, I think, per week, and now we have upped that to 10,000 ZIG. And corporates were at 30,000, now it's at 100,000 ZIG. But having said that, we are not de-emphasizing the need for us to go digital. Cash is only one other means of payment, and we are encouraging banks to ensure that we up the game in terms of electronic means of transacting, so that we complement so that the ZIG cash is just complementing the electronic transactions. In the next 30 or so days, we are going to embark on an expansive and extensive nationwide ZIG campaign. We will reach every growth point, every township, so that people are aware of the features of these new notes. So I think on that note, I will conclude my presentation, and then I'll ask Dr. Mpofu and our colleague Dominic to walk you through the security features of the new ZIG bank notes. Otherwise, I lay the monetary policy statement before you, and these are the new notes. This is the 10 ZIG, 20 ZIG, 50 ZIG. As we said, these are the ones that are coming in on the 7th of April. Then there is the 100 ZIG and 200 ZIG that are going to come later. Sorry. Oh, you want to take? Okay. Okay. First.
Just hold on. You take the 50 coming in. This one is one.
Okay. Thank you. Thank you. Thank you. Yeah, thank you.
Good afternoon. And still morning, just 10 minutes before. Good afternoon, ladies and gentlemen. Yes. All protocol observed. Allow me to ride on it from the previous or the governor's presentation. My task here is very short and sweet. I'll take you through, in a brief manner, on a ZIG journey, how we arrived at this day. And before we do that, I just want us maybe to watch a 5-minute movie. 5 minutes. The movie that defines our national identity as regards this ZIG currency that the governor has just unveiled today. So please, may we start. I don't know whether you have to switch off the lights, but we want more of sound and vision.
In my monetary policy statement of February 2025, we committed to bring to the market improved ZIG banknotes characterized by durability and of good quality, and also meeting international standards. We have therefore introduced the Big Five.
Yes, we stop there. Thank you very much. Let me just go briefly into the journey, just to give you the characteristics that surround the design and also the production of these banknotes with our technical partners. We very much know that central banks at all times ensure that the local currency remains stable by maintaining a low inflation environment, as the governor has already indicated, and ensuring that there is sufficient currency in circulation to meet public demand. Cash remains a critical part of the payment landscape, and it is familiar, inclusive, and continues to be used across society in both formal and informal markets the world over. It does not mean that by increasing the supply of cash in currency, you substitute the development that is experienced in technology as we establish ourselves as a cash-light economy. Digital payments still become very important, but cash has got a role to play in every economic sense. So the functions of money as part of the Reserve Bank's function, its core function is also to ensure that cash remains widely available and accepted as both a means of payment and a store of value. Upgrading the banknotes, as the Reserve Bank has done, is meant to maintain confidence and integrity in the currency ZIG, which was introduced during currency reforms in April 2024. So central banks the world over periodically upgrade designs, security features. They improve the quality of banknotes, regularly conscientize stakeholders on banknote security features to combat counterfeiting. So central banks make sure that you are not always behind technology as when it comes to currency production. Our upgrading of the notes ensures that the new banknotes are in tandem with international trends in currency issuance, security, and design features. Following extensive stakeholder consultations and the concerns that had been raised over the quality, durability, and accessibility of ZIG banknotes, the Reserve Bank rest assures you that these new upgraded banknotes address all the concerns that have been there. And going forward, the governor has committed that we will make sure that cash is available in the optimal way that it should be. and that banks will be followed behind to ensure that it dispenses and disburses cash to their clients accordingly. So to address these stakeholder concerns and deepen domestic currency usage, as the theme of this monetary policy is about, the Reserve Bank commissioned a project to upgrade the ZIG banknote series in January 2025. So this is a one-year journey, very intense and very much done in a period which it should have taken about 1.5 to 2 years to do this production. But because our technical partners accommodated the Reserve Bank of Zimbabwe, we were able to do it in 1 year. So we need actually to applaud our technical partners for this. This was done in good time, and we also very much would want to appreciate from the leadership that we were getting the right approvals as quickly as we could. That's why we could do this, including His Excellency the President. I think we need to thank that. The ZIG, I just want to give you some statistics. The ZIG, since it was introduced, it has placed itself at the top 10 of these selected African countries. In terms of the exchange rate, in terms of the purchasing power parity, if we compare the cost of living and the way our ZIG has remained stable over the years, you can see Zimbabwe is on number 9 there, where our rate has oscillated, as the governor said, from 25 to 27. And taking Zimbabwe as a base, you can see how prices have moved in other countries. To just establish the PPP, you see that we are doing very well in terms of price stability. And that is because we have had a very effective disinflation program, which has resulted in us giving value to our currency. So it is very important that we sustain and maintain this. And also, if you look at the denominations, very more importantly, because you saw the governor introduced the series up to 200. Zimbabwe is among also the top 10 in terms of which one is the highest legal tender denomination, which is 200. You can see there are other countries which go to 2,000, others to even 10,000, others even to 20,000. But in mostly of SADC, Zimbabwe is also there. And we are glad that our inflation now is also there in the SADC range. So this is a very important point that I think we need to applaud for Zimbabwe. We have upgraded the Big 5 ZIG note series not to call it a new currency. We just want to drive that point home, that this is not a new currency. This is an upgraded ZIG which was introduced in April 2024. We have just refreshed it. We have made it nicer. We have made it more attractive for you to want to keep it in your pocket or use it. But please use it. Don't keep it much in your wallet, because it's so nice that you would want to keep it in your wallet. Because we wanted to enhance quality, durability, security features as well. The 5 denominations the governor has indicated, they are available for circulation from 7, but immediately 3 denominations, with an additional 50 coming on since there was 10 and 20. And 10 and 20 will co-circulate with the old ZIG notes. And it will, 10 and 20 will end up being phased out when it gets to the bank. When it is banked with the bank, it does not go back into circulation. But when it is in the market and the people are transacting, it can still be accepted as change and it can co-circulate. But the moment it is banked with the bank, that's how it is withdrawn from the market. The bank will no longer issue from 7 April the old ZIG notes. Okay. I think we thought that is also important to clarify. The design features are inspired by national heritage, wildlife, and landmarks of Zimbabwe as we celebrate our identity and pride as Zimbabweans. You saw in the movie that we showed you, we are actually focusing on the people, whereas they celebrate the resilience, productivity, and aspirations of the Zimbabwean people. and reflecting biodiversity of conservation heritage of the big 5 world animals, and also showcasing Zimbabwe's symbolic heritage and national endowments. So the thematic approach that we took in designing the banknotes actually strengthens the emotional and symbolic connection between the currency and the Zimbabwean people. We want people to know their currency in the context of the national heritage. We want, when you hold a 50, you should know that 50 is Chipembere. That's what 50 is about. And we are going to promote it very much because it's the one which is coming anew into the market. Saka Chipembere, gatiti Chipembere. Yes, that's 50 ZiG. So we have, of course, the other identities we have mentioned. But it's very important for us to have the pride of our currency, the pride of what we identify it with, our natural wildlife, and also the landmarks. We should know that's why the lion is with the Great Zimbabwe. That's the highest note denomination. As the governor says, it will come. Just keep or maybe stay watching, you will see it as it is rolled out. So the national identity, therefore, is who we are. It's a shared story. It is visual. It visually expresses country image through the big 5 in animals and landscapes. So each note's design, therefore, is designed that. So we ask ourselves, who are we? The motifs that the governor explained, I will not repeat them, but they are very specific and distinct and significant in each note. If you just turn your back and look behind you, you will see the mega notes that have been displayed there, very significant, distinct, and you have a time to just view them as we finish off and you do a tour of some of the areas. So the upgraded big 5 banknotes, therefore, as they are defined. So there is the issue of durability. Why are we saying durability? Durability is characterized by the improved 100% cotton substrate paper that is used to produce this currency. And this substrate paper is also vanished after printing or after the designs have been printed on the note, to ensure that we extend the circulation life, to give it a crisp touch, to ensure that it does not quickly touch on dirt, and also it doesn't tear easily. But please, you don't use force to check whether money cannot tear. Yes. And this improved durability reduces the need for frequent replacement and lowering costs and improving circulation quality, signaling lasting value of the money. But you know that lasting value of the money needs to be accompanied with a stable currency, stable exchange rate, stable prices. So currency can lose value no matter how beautiful and attractive it is. So the Reserve Bank is combining all these features of currency stability, exchange rate stability, price stability, and physical note stability. So that will ensure we achieve the durability that we need. So the durability of the upgraded ZiG banknotes communicates the Reserve Bank's commitment on price and currency stability. It is a symbol of it, and we need to make sure that people gain confidence, love the currency, they would want to use it, they would want us to move as fast as we would have anticipated to the exclusive use of our currency. We just want also to be like all other countries. And 2, it has got enhanced security features, or the art of anti-counterfeiting elements aligned with global benchmarks. The upgraded Big 5 ZiG banknote series helps people understand the security about protecting trust, value, and everyday users. Security on a note is very critical. I'm going to invite my technical partner just now when I finish this so that he can explain to you the security features that are embedded from the paper itself up to this. The layered approach that we have on security makes the banknotes secure, while easing the ease of use and convenience. So there are 3 levels of security on our banknote, as you see it, there is one for the public. That's level 1. That level 1 for the public, we call it overt, because these are security features which are easy to identify without any tools or technology. You can see it with your eyes and touch. Those security features are for the public. Kuti muzive kuti imari. And this includes the security thread, the color shifting ink, the water ink intaglio. My technical partner will explain to you going forward. Then level 2 is the machine readable. This machine readable, we call it covert. Covert security features. They are secret. They are not secret. They are covert because these security features are only designed for commercial banks, for retailers, or automated teller machines. So you, as a public individual, you cannot see them. Banks will have specific tools to read these security features. And those we are not going to share with you. We will share with you the green today, the public security features. But you may have to know what it is, but not know how it is revealed. That you may not know. Then the forensic is the secret one. This one is designed for the Reserve Bank and forensic. So even banks won't know it. This one is the 3rd level of security features. So it is designed for central banks and forensic experts, not disclosed to the public to prevent counterfeiting. And they have an M feature. There is a new development of an M feature that is now attached to currency, which is more digital, and it makes it very difficult for people to counterfeit. But that M feature is when the Reserve Bank procures specific, highly advanced technology machinery to be able to do that, which the Reserve Bank is very much set with it. So, ladies and gentlemen, this is the journey, the design, the origination, and the outcome of these ZIG banknotes. But before we proceed to the informational program that we have prepared for you today to just bring out the notes in the totality of it, let me invite Mr. Dominic Fleischer, our technical partner, to come and just share with you the security features. Mr. Dominic?
Yeah. I hope everyone can hear me. Can I borrow yours?
Yes.
Much better now. So, all protocol observed, but also a warm welcome from my side on this historical day. It's a pleasure and honor to be here with you on this day and with such a dedicated team, Mr. Governor. Dr. Mpofu, you have a fantastic team. You work as a fantastic team. And I want to mention this here because the last couple of months we have been working very hard all around the clock, being on different places in this world, really far away, using all kinds of technology and communication to make this project work in this short period of time. And in the 25 years I'm doing my job in this industry, I've never seen a dedicated team like this before. Just want to mention that on this. Yeah, I'm very honored to be here, as I said, and I would like to give you a quick overview on the security features on level number 1, as Dr. Mpofu just mentioned. These are the features mentioned in green. The main features are one of the oldest technologies, the watermark in a banknote. So when you hold the banknote against the light, you will see the watermark. Then there's the security thread in all of the denominations. We have different threads in the 10, 20, 50 and the higher ones, because the higher the denomination is, the more secure you must, the more you must secure it, and that's why the threads look different as well as some of the inks, but I will come to that in a minute. Then there is the intaglio features. You will see various areas of the intaglio features. Intaglio is a very special ink where you can feel the tactility on the notes when you take your finger, scratch along the...
It's not.
It's not? Okay, maybe it's better now. If you cannot hear me or you have any questions, please raise your arms. The intaglio. The intaglio printing is also one of the oldest features in banknote printing because it's printed with real steel plates and it leaves an intaglio, a tactile part on the banknotes which you can feel. This is, for example, on the word Reserve Bank of Zimbabwe on top of the notes, this area, then the main motifs. And then on the left and right hand of the side, you see here as the example of the 10 sig note, the 4 small bars left and the 4 small bars on the right. So sight impaired people can also feel this, and like this, they are able to be part in the community of people using money. And they can decide themselves, is it this or that denomination? That's very important. Here we see again in detail the features. The left-hand side, the magnetic security thread, magnetic, so that is important for the level 2, for machines who can read the magnetism with their sensors. The see-through register, it's also when you hold the note against the light, it must come out like it is described here. The watermark can be seen clearly here when you hold the note against the light, and then you should see the watermark and below the denomination as a highlight. The visually impaired feature, intaglio I just mentioned. The peak is the printed and embossed anti-copy key. This is a feature where, which you cannot copy on a copier machine or scan and print out again. So this is one of the many security elements we have in the banknotes. The intaglio I just mentioned. The 20 is having the same features as the 10. Maybe one slide back, please. Yeah, here we can see under point 9, it's the iridescent ink. Iridescent is a special ink which is coming out more and more clearly the more a banknote deteriorates or gets used, and then you still see this ink. With the normal printing, it will always deteriorate as well, whereas the iridescent ink will come out more and more clearly. And under 11, that's something which is partially level 1, partially level 2, because you need a magnifying glass to see and find the microtext. With the normal human eye, you cannot detect it. Here on the 50, this is the same with some difference. Here on the right-hand side, you can see the printed color shift element. This is the 2 gold bars which are laying on top of each other. And here we have been printing with a special ink a color shifting effect of those gold bars changing between gold and green. This is also one of the anti-copy features. Mentioned again here, for example, for the visually impaired, you can see on the lower right-hand side, this is now 6 bars, so that every sight-impaired person can see, okay, this is now a 50. Here on the 100, you can see the security thread, which is a windowed security thread from the 100 and 200 onwards. Windowed because it comes out and goes back into the note, as we can see it with the 4 windows. Here, this is a very wide thread. It's called the Rolling Star I+, because it has rolling elements in there. And when you tilt the note and look carefully on the security thread, you can see the effect that the color is changing from gold to green. And you have we call it crocodile effect, because there's moving elements in there as well. Here we can see the details on the low end on left, the 2. It is changing from gold to green depending on how you tilt the node. So that's, together with the watermark, a very, very important and easy to look at feature to really see, is this a real banknote, and can I accept it and pass it on? And now maybe one slide back, please. Now the 200, the highest one. Here we have next to the security thread, also the rolling style plus, like in the 100, and a different effect. But here we have on the front side, the 200, the 2 gold bars are being printed again with a very special color. This is the so-called spark color. Here we not only have a change from gold to green, but at the same time, when you tilt the node, there's a rolling bar effect going up and down. And this is the only ink in the world you can find which can do that, because while printing, there's magnets in the printing cylinder which are orientating the small pigments of the magnet while the node is printed, and in the next parts of a second drying. So there's a very high sophisticated printing technology and printing ink, and this is used to secure the highest denominations around the world. Here again the description of the features, and that was in a very brief the overview on the security elements.
Thank you.
Thank you very much.
Thank you.